Hello everyone, just wanted to do a quick video on pivots that get revisited more often than not, how you can use them within your intraday planning and go from there really. So, and also the theory behind some of it. So initially you have, I'll just talk from a basis standpoint, basically any high with too much selling and any low with too much buying are something I don't want to see. And especially for like stop placements. So what I mean by this is if we just go, for example, just to anywhere on the chart. I mean, I picked this out because I've planned this out. But at this moment in time, let's say, you're watching price go higher and higher. And at this high here, you can also see through, and you can look at this and identify this too much buying, too much selling, simply through delta cluster shading. You can see the amount of selling going on at this high through the delta cluster itself. There's a lot of selling going on here. You'd rather it be a lot more buys being trapped, etc. Something like this. There's other factors as well that I'm going to get into as well within this video. But there's a lot of selling happening here. Okay. And when I'm seeing that, does this mean that you shouldn't short? Yeah, it's one sign of it. I would expect prices to head higher. So in that case, yes. But also it would mean I wouldn't place my stop at all above this high. I'm not doing that because I'm expecting price to revisit this level. Even if it drops a bit, you're expecting it to eventually take out this level. So I guess for scalps, in particular, this doesn't necessarily apply in some cases because you could still get a decent drop off, based on this. And that's a complete separate video if you're scalping like very, very quick intraday stuff. But if you're more slower, a couple hours, 30-minute time frames, etc., still intraday, but holding trades for a couple hours, this is still very, very relevant to me. I don't want to see this at all. If I'm shorting here, let's say I shorted, and I placed myself above here, for example, and I saw this, I'd actually close and maybe look for a better entry or further confirmation, because it's just there's too much selling there, not enough people trapped. You don't want these guys. There's no fuel. There's a lack of fuel for the move. So this also applies for the lows of a move, okay, as well. So when you're at the low, for example, you don't want to be seeing too much buying going on here, okay. Again, for the same reason, that means there's not going to be enough fuel for the reversal side of things. So just keep that in mind as a base standpoint. But those are something that very quickly you could look for. Again, something else that I'm always looking for are poor highs and lows on both the day and session types. Very, very easy kind of to spot and identify and when not to look for reversal trades so quickly when you see stuff like poor highs and poor lows, something like this. If I just expand this out, okay, you can see we have a poor high on the day here, multiple clusters, 1, 2, 3, and even at this on the session, and at this point here you're thinking, okay, it's going to get revisited. So just a very, very basic stuff. This one is poor highs, poor lows on the session and daily basis as well is probably more obvious. I'll let this load quickly. For continuation setups at least. And the tick size for this is actually really dependent on how you can see down here, marked it out, poor low. And you want to get taken out. So do they always get taken out? No, but you have to use it in terms of context, okay? Because number one, not every poor high, poor low is going to get taken out. But if I see a poor high, poor low where there's still a somewhat of a spike in the move, okay? And if what I mean by that is if for example there's a poor low like this, but you're still getting these spikes right down here, spikes in price action, meaning that price is spiked down, and within this you're not seeing too much buying happening, you're actually seeing selling. Well, then the poor low, yes, you still look at it and take it into account, but you would definitely place some leniency on that low being revisited. So those are the poor highs, poor lows, too much selling at high, too much buying at low. And the third one, especially as of late, is super important. Probably the best one, in my opinion, are these wick fills. And I'm going to get into time frames as well in a second. But in terms of wick fills, when you see these major wicks occur, right, I'm instantly looking for them to be at least at a bare minimum partially filled. And I'm looking at this on the hourly, or mainly the 30-minute. I'm going to talk 30-minute because that's what the market profile's on, but also the 15-minute, but mainly the 30-minute. You can use that as like your kind of basis for pivots being revisited. based on the size of the wick, etc. So if you're looking here, just very, very basically, when you see this massive wick to the downside here, and let's say, you're watching the price action live in time, do I want to long here? No. Like, absolutely, it's the worst thing I can do, especially on Bitcoin. I'm talking, Bitcoin in particular. This is the worst thing I can do. Similar thing here. I would expect this to be at least partially filled at some stage. It doesn't have to be now, but you're expecting. Would I long here, even if it is to spike up to massively upside? No, I mean that's part of my system in particular. But when you see these massive wicks, and this is the thing. You can be somewhat subjective on it to some degree, but you can have a system of like how big a percentage you want the wick to be. A partial fill, and I'm not saying that it's going to be completely revisited, by the way. So what I mean by that is, let's say you have this wick here. Does this have to be completely fully revisited? No, but I would expect it to at least come back up to here, to at least get some of that. I don't like that type of price action. Similar stuff here. You see the drop, and it also then provides you a bias in the opposite direction. Same here. I'll just talk about a quick trade that I did on I think it was the 11th. I'll very quickly touch upon that because I think it's very relevant. Yes. So basically, and I'll talk about FOMC and stuff like that later on as well. But not only on I'm looking at the 30-minute, I'm also looking at other time frames as well, slightly for this wick. But even on like the lower time frames, basically you saw this massive. It was a very quick move up, and this happened like in 5 minutes. Let's just go on the 5 minute. I'll quickly do this before it starts to become a bit unnecessary. Right? This was it. Okay. So on the 5 minute as well, if you're more scalping, because the theory still applies exactly. When you see this, look at this. At this point, you're thinking price is going back up to this fill this wick. At least in my head, I'm definitely not blindly shorting very aggressively. So price had this wicky price action to the upside, and then it wicked all the way down very quickly. I didn't, long this, and I still had a bullish bias on the day. Okay, I had a bullish bias on the day, and I'm looking at overall for at least 114.5s, basically on Bitcoin at the time, and I didn't long this, and I knew, okay, I'm going to wait for it to at least start to partially fill this and start to revert for me to actually start getting involved. And then that offered up the nice scalp trade of going for something like this. Okay, and yes, it's like a 1.5. I think I had a bit of a tighter stop very slightly, but basically I didn't want to see the wick taken out at that point, because you'd swept a few lows and whatever. There's a few other caveats to take into account there within my system, but overall I was looking for around a 2R 1.9R trade in that case, and basing it off the wick fill, you get much better entries, you're much more patient, and yeah, overall you don't just I'm not blindly trying to catch the spike in these cases, and I'm looking for them to be filled at least partially. So yeah, this is just a quick video on that type of price action and how you can anticipate that type of stuff moving forward. But same here, it's not an ideal wick to the downside, but yeah, we'll see how it goes. Look for partial fills. This is technically still partially filled, but you'll see how it goes from here. So hope you'll find it valuable. I'll catch you later.